You are 32 years old and 3 hours into what should be a routine forensic audit when the first inconsistency appears. The number itself isn't unusual. Governments move billions every day. Currency swaps, bond settlements, sovereign fund reallocations. Numbers that large lose meaning if you stare at them long enough. But this one repeats. You notice it because the decimal structure is identical across 5 separate accounts that supposedly belong to different holding companies on 3 continents. $3,842,117.42. The same number appears in Singapore, then Luxembourg, then Dubai, then again inside a Cayman subsidiary that technically doesn't exist on paper. You stop typing. Patterns like that don't happen in real markets. Money fragments when it moves. Fees shave it. Exchange rates distort it. Human mistakes warp it. Perfect duplication is artificial. You scroll back through the ledger. There it is again, and again. You check timestamps. Cross-border transfers executed within milliseconds. Structurally impossible without a pre-coordinated internal system, which means the money never actually moved. Someone created the appearance of movement. You lean back in your chair and stare at the monitor while the realization spreads slowly through your thoughts. This isn't just accounting noise, it's a fabrication layer. You work for a mid-tier international audit firm that handles unpleasant financial truths governments prefer not to examine too closely. Your job is usually simple. Confirm numbers, flag discrepancies, produce reports that sit quietly inside classified folders. You aren't paid to dig past the first lie, but once you see a pattern like this, your brain won't let it go. You open the Sovereign Fund's public disclosure document. Officially, the fund holds $487 billion in diversified assets, energy stakes, infrastructure projects, strategic reserves. It's presented as the economic backbone of a rising state. The country's leadership calls it their guarantee of future stability. Investors believe it. Markets believe it. You are now looking at 5 numbers that suggest the money might not exist. You run a deeper reconciliation. 30 minutes later, you stop breathing for a moment. Because the duplication doesn't happen 5 times, it happens 97 times. Billions replicating across shell structures like reflections in a mirror hall. If every duplicate is fake, and the pattern strongly suggests it is, then the Sovereign Wealth Fund doesn't hold nearly $500 billion. It holds something closer to 30.
Your first instinct is denial. Maybe it's a clearing artifact. Maybe an internal collateral structure, maybe a software glitch. You run another verification process, then another. Each one produces the same conclusion. The assets are synthetic. Not entirely fabricated. There is real money somewhere, but the majority of the portfolio is a layered illusion created by circular transfers between government-controlled entities, a financial echo chamber. You close the terminal window. Your role is to document inconsistencies, not expose geopolitical fraud. If the numbers mean what you think they mean, the consequences aren't accounting adjustments, they're economic detonation. A sovereign wealth fund collapse can destroy currency stability, trigger bond market panic, collapse investment pipelines. Entire pension systems rely on these funds being real. You shut down the workstation and pack your laptop into your bag. You intend to write a quiet internal memo recommending deeper review, nothing more. But the call comes before you even reach the parking garage, a private number. You almost ignore it. Something about instinct tells you not to. You answer. The voice on the other end is calm, controlled, and already knows your name. "Mr. Auditor," the man says, "we understand you've encountered something unusual." You stop walking. "Who is this?" "Someone who would like you to continue your work." Your pulse slows. You don't ask how they know what you found. The answer is obvious. Someone is watching the audit servers. "You should speak to my firm," you say carefully. "We have already." A pause. "They will be withdrawing you from the project tomorrow morning." You feel something cold settle behind your ribs. Why? Because they prefer not to be involved in what happens next.
You lean against the concrete pillar in the garage. What happens next? The voice doesn't hesitate. You determine whether the sovereign wealth fund of a G20 nation is real. Silence stretches between you. Why me? Because you already saw the first layer. You close your eyes for a moment. This sounds like a political problem. It is a financial problem that will become a political problem. And you want proof? We want certainty. The difference matters. Proof convinces people. Certainty survives attack. Who is we, you ask? The voice ignores the question. If the fund is legitimate, your report will confirm it. And if it isn't? Another pause. Then you will have discovered the largest financial deception in modern history. Your throat feels dry. Why not send government investigators? Because governments are involved. The weight of that sentence lands heavily. Which government, you ask? Yes. You stare at the concrete floor. You understand the implication. Multiple states suspect something is wrong. None trust the others enough to investigate directly, so they send someone invisible, an auditor. What happens if I refuse, you ask? Nothing. The answer comes too quickly. You return to ordinary work. The numbers remain unresolved. Markets continue believing what they currently believe. And if I accept, you become the person responsible for discovering whether $500 billion exists. You imagine the alternative scenario. If the fund collapses suddenly without warning, markets could lose trillions overnight. Currencies crash. Governments panic. Ordinary people lose savings they didn't even know were connected to the fund. And somewhere inside that collapse will be the knowledge that you saw the first crack and walked away. You rub your eyes. What would I need to do? The voice finally sounds satisfied. Travel, access records, follow transactions through jurisdictions designed to prevent exactly that. How long? As long as it takes. And if someone decides they don't want this investigation happening, they probably already have. You exhale slowly. You understand I'm just an accountant. No, the voice says calmly, you're an auditor. You realize something important then. Auditors are the only people in global finance legally empowered to question every number. You say yes. 3 days later, your firm informs you that the Sovereign Audit Project has been reassigned. Your access credentials stop working. Your company email is disabled. Your professional life disappears with bureaucratic efficiency. At the same time, a new set of encrypted credentials appears on a secure laptop delivered to your apartment by a courier who doesn't ask for a signature. The files inside outline the structure of the sovereign fund. Hundreds of subsidiaries, dozens of jurisdictions, layers of shell companies designed to create the appearance of independent investment vehicles. But when you map the ownership network, the pattern becomes obvious. Everything eventually loops back to the same central treasury authority. Circular capitalization, money injected into one entity, reported as an asset in another, then counted again as collateral somewhere else. Each loop inflates the total. Each loop strengthens the illusion. You spend 6 months tracing transactions across the network. Singapore to Zurich, Zurich to Abu Dhabi, Abu Dhabi to London. Every jurisdiction adds friction. Banking secrecy laws, regulatory barriers, data access restrictions. But auditors have a peculiar advantage. Numbers eventually betray themselves. By the end of the first year, you've reconstructed nearly $200 billion worth of synthetic assets, assets created entirely through internal transfers. The sovereign fund reports them as independent investments. In reality, they're just money moving in circles. The deception is sophisticated enough that no single regulator could detect it. Only someone mapping the entire system at once would see the pattern. You begin to understand why you were chosen. The second year is when the danger becomes real. Up to that point, you were just an anonymous analyst moving through financial databases. Then you request access to a shipping insurance registry connected to one of the fund's supposed infrastructure investments. The registry denies your request. 2 days later, your temporary apartment in Zurich is broken into. Nothing is stolen. Your laptop remains untouched. The only difference is that your notes have been rearranged on the desk. Someone wants you to know they were there. You report the incident through the encrypted channel. The response arrives in under an hour. Continue. That's it. You realize the investigation now exists in a dangerous space. If the fund managers believe you are a threat, they might attempt to stop you. If governments believe your findings could destabilize markets, they might also attempt to stop you. You are pursuing a truth that everyone has incentives to bury. You continue anyway. Year 3 produces the breakthrough. You uncover a liquidity guarantee agreement between the sovereign fund and its central bank. On paper, it's a routine stabilization mechanism. In reality, it's the core of the illusion. Whenever the fund needs to demonstrate asset value, the central bank temporarily injects capital through short-term swaps. The money appears in financial statements. Auditors verify it. Then the funds quietly return to the central bank days later. A revolving door of capital. The same $20 billion masquerading as hundreds of billions through timing manipulation. You run the numbers again. If the swaps stopped tomorrow, the sovereign fund would instantly lose more than 80% of its reported value. You stare at the screen for a long time. The entire structure rests on confidence. If markets believe the fund is strong, the illusion works. If markets discover the truth, the fund collapses immediately. You compile the findings into a report. It reaches nearly 1,000 pages. Transaction chains, ownership maps, liquidity swap schedules, mathematical models showing exactly how the illusion functions. When you send the report through the secure channel, the response takes 2 days. That delay feels significant. Finally, the message arrives. Your findings are confirmed. You read the next line twice. The sovereign wealth fund is structurally fraudulent. You expected relief. Instead, you feel something closer to dread. Because now the question becomes unavoidable. What happens next? You request clarification. The reply is short. Multiple governments are reviewing your report. You imagine the closed-door meetings already happening. Finance ministers, central bank governors, security advisors, everyone calculating the same thing. If the truth becomes public, global markets will react violently. But if the lie continues, the financial system becomes even more fragile. The responsibility feels heavier than the investigation itself. You are the person who proved the illusion. You may also be the person whose discovery detonates it. A week later, you receive a final message. There will be no public disclosure at this time. You stare at the screen. So the decision has been made. Stability over truth. Markets will continue believing in a fund that largely doesn't exist. The deception will persist. You close the laptop and sit quietly for a long time. Because you understand something now that most people never realize. The global financial system runs on belief. Numbers printed in reports. Assets valued through confidence. Entire economies balancing on trust that the math is real. You proved that sometimes it isn't. And somewhere in the world, the people who built the illusion know you know. Which means the story doesn't end with the report. It continues quietly in encrypted networks and classified briefings. Because once you've exposed a lie that large, you never really return to ordinary audits. You become the person governments call when numbers stop being trustworthy. The person sent into financial systems where the official story doesn't match the arithmetic. You close the laptop and look at the secure phone sitting beside it. It rings almost immediately. You already know what the voice will say before you answer. Another sovereign fund, another set of impossible numbers, another illusion waiting for someone to prove whether it's real. And now, you are the person they send.